Okay, welcome to Stock Talk with Nico Criticos. Today we're going to be going over my bullish thesis on Irobot stock, and I'm going to try to make this video right this time because I just made a 20-minute video on this with the wrong screen on, but this time we're going to do it right. So first thing we're going to look at, if we go on Amazon and type in Irobot, or if we type in robot vacuum, you're going to see Irobot's products, one of the most popular on here. We have their more expensive ones of $850. And we also see that the best seller, or Amazon's best rated one, is this Irobot Roomba vacuum. Okay. And before, when I searched on here, I typed in robot vacuum, and the first thing at the top was a Roomba, but now it looks like it's a little bit different. But I've definitely have seen in the past, I've seen Amazon said that some of their best selling products is the Irobot Roomba vacuum cleaner. So definitely a great sign there. Now, if we look at the stock price, we get to get $65 a share. And at this time last year, it was near it was over $130 a share. And I bought $35 a share at $65 because I think that this company will be $160 plus in the next couple of years. And I'm going to show you exactly why I think that. So we are going to use Nico stock market checklist right here. But first, I'm going to take you through just some basic notes that I've after watching their investor presentation videos, I took some notes down. So their three main products are the Roomba vacuum cleaner. That's what they're most famous for. Then we have the Brava, which is a mopping robot product. And then we have Root. And there's a video on this on their website that shows you how the Root is pretty much, it's a little robot thing. And it's also an app that kids can download to learn how to code. So it's really interesting. I didn't know they did this till a couple of days ago, but it looks like they're actually making a product to teach kids how to code, and kids download the app and they play this game and it teaches them like that. So that's pretty interesting. We also seen last year they bought a Switzerland company for $72 million that will help them enter the air purification market. So they're actually selling these air purifiers now, and that TAM is expected to double over the next 8 to 9 years. So if we look at their revenue, we can see about half comes from the United States, half from international, and one retailer is accounting for 22% of their revenue. That's kind of high. It's definitely not great, but I don't know. If it's a big company like Amazon or Walmart, maybe that's understandable, but something to keep an eye on. We don't want that number to get too big. Then we have the fact that 19% of revenue goes towards sales and marketing expenses. They said in their last 10K that this was going towards new machinery as well as expanding into Malaysia. So the main reason this stock has gone through so much volatility and been just killed the last year is for a couple of reasons. So before the pandemic, they had the problem of the China and United States trade war, okay? And that was their first problem. Then after that, their next thing was the chip shortage, and then now they have supply chain issues like every other company. And so that's really why this stock is getting hurt so bad. But besides for that, I think that's a big reason why I'm bullish, is because once those things subside, once supply chain gets fixed and the chip shortage gets fixed, then I think the CEO said that's going to happen probably by 2023. Then all those things will go away and profitability will skyrocket. So, like for example, last year, 2020, they did, what was it? $4 of EPS, and this year they're only expected to do $1.40. And then for next year, they're expected to do $1. 2022, they're expected to do $1.80. So still not back to the profitability they had 2 years ago, but I think eventually it will get back up there. Next up, we have 538 United States patents and over 1,000 in Europe. So that's definitely a big competitive advantage for them. We have the fact that the CEO said that the main thing that will differentiate them from the competitors is their artificial intelligence software. And they're really trying to establish a strong connection with their consumers. They have, they're focusing more on direct to customer sales, rather than going through a third party. And then they also have their app that they've been working on to, they're really trying to not just be a robot vacuum company, but also a smart home company. So that's why let's see if I can do this. If we go to share, let's share this one. You're going to see here that this picture shows their TAM. And the CEO said that out of all these industries, some of these they haven't even talked about yet, but right now the vacuum cleaner industry is $22 billion and air purification is $10 billion. But then you have all these other things like the lawnmower, the home security, the smart plugs, the smart speakers. That TAM altogether is $250 billion. So maybe 10 years from now, they get into all these industries and they're operating in a $250 billion industry. That has yet to be seen though. If we go back to this, we can see that. So right now their market share is 75% market share for robot vacuums in the United States. And then globally it's about 60%. So very strong market share. And hopefully they're probably not gonna be able to maintain that high of a number long term, but if they can have a third of the market 5 years from now, then that's great. That's a huge edge for them. They said in 2021 they had roughly 13 million customers, and their estimate is that they'll reach 30 million customers in the next 2 years. Right now their total addressable market is about $22 billion, and how I just said, if they expand to all those 4 different segments, they will have $250 billion of TAM. Kind of seems like a far stretch, but we'll see what happens. It's good. They're being ambitious with their goals. And how I said 60% market share. Now this is their number. This is their estimate for $2.5 billion in revenue for 2024 and EPS of $8. That would mean I came out with the number of a PE of 20. That would put the stock price at $160. A PE of 20 is totally realistic. The company's been trading at a 15 to 25 PE. So that is definitely realistic. EPS of $8, it kind of seems like a lot considering they did $4 last year and then $1, it seemed like $1.40 or $1.80 for the next year or two. So that kind of seems like a stretch. Maybe like $5 is more realistic, but we'll see what happens. And coming up on February 9th now, we have their earnings for Q4. So I'm still expecting them to say, they're having supply chain issues, chip shortage issues, but hopefully they'll give some better guidance and that will help the stock price move up. But that's pretty much all for that. Now, if we move on to Nico stock market checklist, we can see the stock is down, right? It's down almost over 45% over the past year. That's going to get a check. Revenue and net income increases have been fantastic. The CEO, Colin Engel, he was in that investor presentation video. He did a great job explaining. He was a co-founder of the company in 1990 from MIT, and he's done a great job growing this. I like they pretty much invented the space of the robot vacuum cleaner space. So they've done a great job with innovation and having insanely high market share. They just kind of the last couple of years have been rough with them just for profitability, just because of things like the material costs and the supply chain issues. That's really been their only problem. But revenue and net income has gone super strong the past couple of years. 2014, they did $500 million of revenue. 2020, they did $1.4 billion. So almost a triple up in 6 years. We go back to the checklist, we can see, so net income has also been good. Then we have a forward price to sales. I put a 0. It's technically a 0.9. They're expected to do, if you go to the analyst, so this is a $1.7 billion company, right? And they're expected to do 1.8 billion in revenue for 2022. So the price to sales is super cheap off that metric. Healthy forward PE, it is a 34. How I said earlier, they're expected to do $1.80 in EPS right here, but the company's $65, or the share price is $65. So that's a 34 forward PE, kind of high, but you got to think this is going to be 24% EPS growth, which is very nice. I put it could be more like a 16, because if that profitability comes back, then that forward PE is going to drop, earnings are going to shoot up, and it's going to look super undervalued. Next up, is the company innovative? Do they have a moat? Yes, they do. Not only do they invent this space of robot vacuum cleaners, but they also have over 1,500 patents, giving them another edge. And they have a super strong brand loyalty. Everybody knows Irobot for their Roomba vacuum cleaners, and how I said their market share is through the roof, and they're a huge leader in their industry. Is the industry growing? Yes, in pretty much all the industries they're operating in, the air purification, the mopping robots, the vacuum robots, everything seems to be growing, especially with the smart home, the whole idea, definitely a good sign there. Return on invested capital, 22%, incredibly high. That's a fantastic number. Only weaknesses for this company is their margins and their cash flow, mainly because of those reasons I stated earlier with the supply chain, material cost. But that, once again, that will probably, that's going to subside within the next 12 months, and then everything will be back to normal. Diverse revenue streams. Yes, as I showed you, all those different, not only are they operating in all over the globe, but they have so many different products. All those different products they plan to come out with in the future, those are different streams of revenue. Only thing, remember, only weakness for that segment is the fact that 22% comes from one retailer. That's a little bit of customer concentration, but it's understandable if it comes from a giant retailer like Amazon, which I'm not sure it is, but if it's probably from some huge retailer like that. And then we have the balance sheet. Assets are looking good compared to liabilities, and the assets for both long-term and short-term are both over 2 times the amount of liabilities. That's good. Increasing equity. Yes, it's the last couple of years all look healthy, so that's good. Share buyback. Yes, they bought $200 million worth of the shares back in 2021, and they were buying the shares at $110, $120 a share, and now it's half of that. So that's another reason why I love picking up shares at this price. They don't pay a dividend, but at least you got the share buyback program. Now, big money is interested. Big money that's the hedge funds, Vanguard, BlackRock. Those companies do have 9-figure positions in this company. But the problem I don't like is that insiders they own less than 2%. That is not good. That doesn't make any sense to me. If we look right here and we look up Irobot, you can see that over the past couple months, the insiders have not been buying. There hasn't been really any activity. There hasn't been too many buys or sells. So I would like to see some insiders purchasing some more shares, but it is what it is. So that's going to get a no. But overall, 13 out of 16 is a phenomenal score, and that is why I'm considering this to be a buy in 2022. So here is the stock price, and I'd be curious to know, what your guys' predictions are. What do you agree or disagree? And let me know what your thoughts are down below, and I will get back to you. I will see you in the next video, and thank you very much for watching.